One of the scariest, most bearish charts in crypto have started to do the rounds on crypto Twitter as well as crypto YouTube. And it's the scariest chart that you've probably seen in your entire lifetime, because the last time that we saw this was in, well, 95 years ago in 1929, just before the Great Depression. So let's just quickly pause that. All right, sorry about that, guys. Let's quickly go into that. So we're going to have a look today at, is there validity around this chart, the bearish chart, that most bearish at least that we've seen in 95 years. We're going to have a look at major economic events that are going to be coming up in the coming weeks. We have CPI inflation data, as you can see, which will, of course, affect what the Fed is going to do just a couple of days from now, leading into the next major FOMC decision, where they will be cutting rates. That's priced in at 100% probability right now. And we'll have a look at this chart over here, which is the uninversion of the yield curve. The last time that we did see this was literally the Great Depression, 1929. And is there validity in this? Are we going to be seeing one of the biggest crashes ever? Well, there's a lot to look at over here, and there's a lot to unpack. The first thing that I will say is that this is an election year, and you can see the S&P 500's performance during one of those election years when the president does take office has been the following, right? Well, you saw over here in 1989 under George Bush, well, that was 27.25% move. Your average is about 12.54%, by the way. You had Bill Clinton bringing in 7% gains for the S&P 500. George Bush in 2001, negative 13% gains. That was, of course, also leading into a major recession. 2009, Barack Obama, 23.45% gains. Donald Trump, 19.42% gains. And then under the biggest money printing regime we've ever seen, Joe Biden in 2021, 26.89% gain. So we have a whole lot to look at over here. The only one that was down was, of course, the .com bust, right? And 9/11, that was, of course, this one over here, George Bush, 2001. The stock market did crash. So what could we expect next under the yield inversion? Well, all that I can showcase to you over here is when you do highlight what happens next, it takes time, right? So once the yield curve uninverts and starts to move towards the upside, it can take a number of months before you start to see the markets flatten out or crash. So is this a nothing burger? Is this something that you should be hyper focused on? Well, I think right now, as I mentioned over the course of the weekend show, focus on the chart that's in front of you, trade the chart that's in front of you, because a lot of analysts and traders are still calling for the largest recession since 1929. There it is, same level, right? The inverted yield curve came as low as 1929 and is now starting to uninvert. However, first, blow off top, right? Blow off top for the crypto markets, blow off top for the stock markets, and then uninversion, and you're starting ordinance, and then the Great Recession. You are seeing Banter bubbles over here with a lot of the coins trying to put in a bit of a bounce over here. Even some of the monthly charts are turning around for the crypto market. So we'll look at some of the coins that are strong. We've been focusing on them for a number of weeks. I don't know if you guys saw, 𝗬𝗎 has been one of the top performers, and we've been looking at that coin for quite some time. So what could bring some newfound liquidity into the market? One thing is going to be the M2 money supply increasing, which is typical of those election years, and that usually leads to high prices. Now, if you isolate the quarterly returns for Bitcoin, most notably October, November, and December, that being the final quarter, and you isolate that to the halving years, this is what we found. Well, it has a 100% hit rate of positive returns in 2016. You can see you had the entire quarter, each month, October, November, and December being green. And then if you go to 2020, you had, of course, October, November, and December all being green, putting in the biggest gains of the year. And this is the blank page of the book, right? What can you expect to happen next over here? Will history repeat? Will history rhyme? I think the probability is high that it will. If you do appreciate the analysis, by the way, guys, please do smash your like button. It really helps to get the show content out there. Now, the other thing that I wanted to dive a little bit deeper into on Matthew Hyland's tweet over here is the Bitcoin weekly RSI closing at the lowest level since January of 2023. And you can actually see over here, if you look at January 2023, when it closed at those low levels, well, ultimately this marked major bottoms. One was this move up over here. The second time over here was at $21,000 just before price started to rally. So I went through and I had a look at the stochastic RSI, and there were 13 different iterations that we could have a look at over here. I marked out the white ones, the periods where it was a pre-halving year or a bull market, and then I marked out the red ones over there when it was a bearish market. And if you have a look over here and you zoom in, you'll notice, let's just quickly correlate it. I outlined on the bottom phase over here of the stochastic RSI, most specifically when it came all the way down to that 1.71 read. And if you zoom in and you go through all the results, I'm just going to give you the data because I'm pretty sure you don't want to sit and actually have a look at each one individually. You can take my word for it. These were the results. Each and every time, barring 2 times, there were major pumps within the market, big bounces, even in the bearish market. Now, if you have a look over here, you had a 109% move, which was, of course, the first one. Then you had a 54% move, even in spite of the bear market. When the RSI or stochastic RSI came down to that low read, it did lead to a 54% move. Then you had a 47% move, also in a bearish market, a 295% move, also in a bear market. The fifth one was a failed one, right? So we can go through to the fifth one over here. Let's just quickly check the failed one. 1, 2, 3, 4, and 5. This was a failed one. There it was. This was, I guess, similar price action to what we're currently seeing within the markets, which is tracking similar to 2019 in the sense that we've printed our bottoms. This would be like the FTX lows that occurred in 2018. Price rallies up, and then you go through that pre-halving corrective phase, right? So this was one example of a failed attempt that resulted when the RSI came down to those low levels, resulted in a negative return. The next one was the exact low over there for at least COVID, and that led to, and I'm only measuring the move from low to next local high, and then you of course have a pullback, and this comes next. And when you consider that, that's going into, of course, the sixth time, which was 217% move. 139% move was the next one in a bull market. 16% move even in a bear market. That's towards the upside. The ninth one failed, right, in a bearish market. The 10th, 11th, 12th, and 13th all positive in a bull market with 103, 93, 19, and the most recent one, which occurred over here, providing a 30% move from the lower boundary of this bull flag all the way to the top side over here, and then of course failed. And now once again we're coming down into those low regions. For the conservative traders out there, it still remains the same, right? You can simply just wait for price action to create a higher high by breaking above $65,000, and then you can buy the next high low that occurs. That will also get price action above the 21 EMA, thus confirming a bear trap, right? Because you are seeing a lot more fear come into the market. You have 26 read on the fear and greed index over there, and you can compare. We've been printing between 10 and 30 on the fear and greed, which is where a lot of these local lows, even the COVID low, occurred over here with a read between 10 and 30, and those are the current reads that we've seen, right? The most recent one, when we had that wick that came towards the downside, took it between 10 and 20, and the more recent ones over here have been printing between 20 and 30 on the fear and greed index. And usually that provides a wonderful opportunity. So I took the liberty of actually marking out when we come into this red horizontal region over here, most notably dropping the fear and greed into that 20 zone. And then I correlated it as well to what occurred in the prior times when we had negative funding rates. For those of you in Whale Room, I've of course already dropped this in there. So if you do want to actually have a read through the data and a little bit more in depth, it is there in that in the captain's take section. So I wanted to have a look over here. Of course, one of the most extreme we had came in this region over here, 2020. The next one was in September, which was, I think, similar to what we're currently seeing with a bear trap scenario, pre-expansion of the market. And then the next one over here was 2021, and then 2022, and now we're coming down into these low regions. What I noticed, though, is that looking at the funding rates over here, when they go extremely negative on the weekly time frame, are actually more accurate in pinpointing the exact point in time where price bottoms. The sentiment only seems to come a couple of days to weeks after the bottom is already in. Then the market starts to flip really bearish because, of course, it's reactive, right? The sentiment indicator on the fear and greed index over here is reactive to what's actually happening in price, whereas this is real time. So if you have a look at that, what are we seeing right now? Well, we're seeing back-to-back weeks of negative funding, although very, very small, it is still significant because you can actually see the price times, right? COVID, we had over here FTX, we had the USDC-D peg, the yen, cash and carry trade, which is where the wick low went, where the sentiment, of course, dropped all the way down into that 10 to 20 read once again. That was right over here on that little dot. So all in all, we are looking for a little bit of a reversion. The market is still negative. If you look at the deltas, which we dropped in the capital, or at least in the institutional chart section of Whale negative, 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 negative. And that is on, of course, Bitcoin, ETH, Solana, Pepe, WIF, and NEAR. So just giving you a broad sector within crypto, most of these coins are running negative on the deltas. And Jason says it well over here, what he identifies, just to zoom out, right? He says Bitcoin spent 6 months going up $49,000 and has now spent 6 months going down $25,000. If these were 15-minute bars instead of 1 month bars, you probably wouldn't stress as much. It's the exact same pattern. The problem is time. There's a lot of time in between the moves, enough time to stress about the move, even though there's been no macro change really in the high time frame picture, right? The pattern remains the same. Keep calm, zoom out, and enjoy your weekend. You can go out and touch some grass, right? Because this is what we've been looking at for a long time, is a 6 month correction. 4 to 6 months is what we said. And you can see right now, the 12th of September will mark the exact date of the 6 month mark. So you're consolidating into this low region. And this is where we expect a little bit of an inflection to start to occur within the market. And soon after that, which is 2 months from now, we'll be going into the US election phase. And we've also outlined on a chart what that looks like. And therefore, this is the period where you do not want to be shaking out the market. But instead, this is what we're seeing within the markets, is we're seeing a massive shakeout. And this is typical of a bear trap, right? Because if you look over here at the definition of a bear trap within this part of the market segment, well, the correction is fed by over-evaluation concerns, premature fears that the cycle has ended. And you can literally look in the comments right here, right before us, as we sit and do the show live right now. And I can see people saying in the comments, the cycle is over, pack it up, see your 10K, bro, see your 12K. That's literally the commentary. This is the exact sentiment that you would expect pre-expansion of the market cycle. So there's a lot of fear within the market, of course, because of this chart over here, which is uninverting. That is, of course, something significant to look at. And we're following the stock markets very, very carefully over here, where we initially took the long trade. Of course, we've taken our profits on that. We're out the trade. Instead, we'll now be looking for the next major opportunity. So as the stock market pulls back, major support levels on the S&P 500 remain at $5,185. No guarantee that you'll even get that low, but that's a significant zone. The next one on the S&P or the Nasdaq on the right-hand side, top right, 442. Watch for it to meet up over here with, of course, the 200-week moving average. And then we do have Coinbase, which you outlined is starting to break down. It's coming into the next key zone, is going to be 120. We can have a closer look at it in just a moment on the next chart. The part of the pressure towards the downside, of course, is the DXY, which is starting to push up over here. Now, we do need to watch for this because the DXY is a tricky one to trade. Of course, it's affected by, not just retail traders, but literally nation states because of the power of the dollar globally. So watch as price starts to bounce up over here. We'll look for a little bit of resistance coming into this downsloping trend line. This could be a high low, which means that you could rally up. We did see something like this actually occur all the way back in, I believe it was in 2019, in this period over here. Let's have a look. Okay, in this period over here, we saw a similar breakdown with price action over here, and then it led into one more massive rally towards the upside. We saw the same thing over here again in 2019, right? It started to look like a breakdown. If you focus on these candles over here, it started to look like a breakdown, only for price to rally up one more time. So we do need to be cautious of that. We spoke about it a couple of weeks ago from a fractal perspective, the whipsaw effect that you get within the dollar. So monitor this chart very, very carefully. This is causing a little bit of pressure within the stock markets. And if you go on to at least the Nikkei 225, you're seeing it do the rounds as well on crypto Twitter. At the end of the day, I think that this low will most likely be defended. It's a super strong horizontal level that the chart respected. And at the very least, or the very worst, I should say, maybe you just come down to full 50% of that wick. NVIDIA over here, still chopping about. This is your range-bound environment between 90 on the bottom side, 134 on the top side. Let's quickly see how Apple's doing. Apple's still uptrending, still looking good. Here's your Coinbase chart. We spoke about that. Watch for the major support between 116 and 120. MicroStrategy, also range-bound, bottom of the range coming in at 104. Tesla, I'm also keeping an eye out on over here. It is a choppy environment, but I think the point of maximum opportunity for Tesla will be a throwback into this region. If you do get that, that would be a very, very good buy zone, which is going to be just below 140. So anywhere between 138 and about 160 is a great, great buy zone for Tesla in the long term. If you look at the total cryptocurrency market cap, it is, of course, starting to establish a pretty strong downtrend with low lows and lower highs. Below all the moving averages, the 3, the 7, and the 30 moving average, with price below each of them respectively, and they're spreading, right? As they start to spread, you get stronger and stronger move towards the downside. But I do also want to outline, there's still the potential, and this is the exact same on Bitcoin. You do have the potential for massive cup and handle formation, right? Remember, that's your cup. This is the handle part over here. So as soon as you start to see the trends shift towards the upside in alignment with the timing cycles that we've been looking at, that should present a trigger opportunity for you to start to look for longs again, because things can get very, very exciting. Remember, this becomes the measured move from the bottom of the cup all the way to the neckline over there. You can pretty much copy and paste that to see where the market cap would go next. So we can actually have a look at that. Let's quickly have a look. So based on, let's go conservatively and say that's the neckline, and you measure from the breakout point. Let's just assume it breaks out a little bit later, maybe at some point in October. Well, that would take the total cryptocurrency market cap just off this pattern up to $4.2 trillion, which will be adding a lot, right? That's at least, what are we at? Double. That's just a bit more than double, 118, 120% still potential upside over there. YouTube views continue to diminish. That's why you guys can help us out. Smash the like button. It gets the show content out there. This is still coming towards the downside in a time-based capitulation. So the market is capitulating, but through time. Now, for the rest of you that are still here, I recommend, just get your ducks in a row, prep your accounts, have some of your cash allocated onto exchanges already, waiting to buy the dip in the event that we do still have a capitulation candle, because we cannot rule out the possibility of sweeping the yearly open. As long as this downtrend continues to persist over here, the yearly open on the weekly time frame is a threat, which would mean a sweep below $42,300, possibly down to about 39K, and that becomes a major liquidation event and a buying opportunity. So if you are looking for an exchange and you want to prep your account, you want a non-KYC exchange where they're not taking your personal data like your passport, ID, etc., use the link in the description below. My link specifically will qualify you to the spin the wheel. This is Blowfin, no KYC required. You can come here and spin the wheel. You pretty much have a 90% chance of winning something, because there's only one of these little pizza slices that say good luck with a sad face, meaning you win nothing. The biggest prize of here would be 1,000 𝗬𝗎 that you can win. And to take advantage of this, you only have 1 day, 3 hours, yes, that's correct, right? 1 day, 3 hours, and 6 minutes left to participate in this. I've personally selected these coins, by the way, 𝗬𝗎, Mantra, Injective, and Rune as some of the coins that I want in my own portfolio. All right. Looking at Bitcoin over here, so we came down into the low region. This was exactly according to plan. We have not yet hit the 50% level. I said now watch for the potential rejection from this 55K zone, which you can see price. This is over the weekend show that I covered. Price is pushing into that zone, and it has started to pull back from 55K. If you set in a lower high over here, expect one more move towards the downside. Maybe that's where you come a little bit deeper into that $51,500 level, and then simply just observe. Watch for the reaction. Watch for the wicks that start to form around this level. If you do see signs of strength, that may become the major buying opportunity, right? So that's what I'm watching for. Again, alternatively, as mentioned, if you're very, very conservative, all you have to do is wait for this, right? Price to break above $65,000, take out all this liquidity, hold above that zone, and then you're 𝗕𝗕𝗓𝗧. So very much still a no trade zone within this area for most people, right? Low time frame traders, there are tons of opportunities out there, and we've actually been trading this in Whale Room quite aggressively within this choppiness over here. You can actually see, if you look over here, we have 𝗕𝗘𝗧𝗕𝗥 dropping a Mantra short trade. Remember, I spoke about Mantra breaking that massive uptrend. If you lose that, there's a lot of liquidity that comes towards the downside. So in profits on that trade. Here's another one on Bitcoin, taking the short trade 204% up over there. Remember, we're also looking at the SUI longs, and then we have the traders in Whale Room, which will help you find the pinpoint entries, right? So there it is. Pinpoint entry on SUI taken from the bottom all the way into the mid-range over here at the 0.786, which is definitely a key zone where you're looking to take some of your profits. So all in all, really, really good stuff over there. Bitcoin dominance still pushing towards the apex, waiting for a little bit of a breakdown. ETH BTC still coming into the bottom, also still waiting for this to break towards the upside. So as soon as the inflection point occurs within the market, the inflection point over here, and we start to see some notable changes occur, new liquidity come in, that's probably where you start to see, of course, Bitcoin dominance breakdown, ETH BTC break towards the upside. The point over here is that ETH BTC is probably closer to a bottom than not, and Bitcoin dominance is probably closer to a top. They're not. So these are things we need to look at. Also, one of our top over here is Casper, right? The hash rate continuing to uptrend over time, right? Very, very significant over there. And this is what we outlined as the key zone. And you wicked directly into it. Exact. Why do we have this level? Number one, it's your mid-range. So taken from range high and range low. That's a 50% level. Number two, it's also 50% of this wick. So we're looking for the inefficiency to be filled over there. And we hit that on the nose, 0.1401. And we're looking for possibly the high low to form over here and prices to push up higher. Okay. Also want to talk a little bit about Solana, because we are coming into the Solana Breakpoint conference. You're grinding into this low level over here. This will really need to start to get moving very, very soon if it does have a hope of playing out like it previously did. Now, if you look over here, the average return in the prior breakpoint, at least, or the prior Solana conferences, not necessarily breakpoint, but the prior Solana conferences results in 20 to 40% gains depending on the date, right? So here it is. You can have a look at that. Return for longs. This is 2021, 22, and 23. I'm going to go in with the averages. 10 days before breakpoint, Solana breakpoint, you had a 22.16% move. 20 days before breakpoint, had you bought then, you'd get a 43.64% move. And 30 days before the Solana breakpoint events, had you bought then, you'd get a 40% move. So still some very, very sizable returns which could come for Solana, with Solana being near the bottom of that range over there. It's only from wick low, bounced 6.8%. So you could still have at least 30%. Let's see, where would 30% take it if it played out like the prior times? Pretty interesting, right? 25% takes you right into the mid-range level over there. 30% will break you above the mid-range, taking you to about $168 for Solana. So we'll keep an eye out on that. Okay, the 𝗕𝗬𝗕𝗏, literally Elon Musk's account, there is 196.9 million followers. Department of Government Efficiency, the 𝗕𝗬𝗕𝗏. He tweeted this. What happened to Doge's price? Let's go and have a look at Doge. Let's go to Dogecoin over here. What happened to Doge's price? Do you guys think it pumped? Let me know in the comments. Well, nothing. Unbelievable. The way the market is at the moment, a lot of these highly influential people have lost their power, right? If he had said this in 2021, you probably would have got a candle like this. But now it seems like nobody cares. Nobody cares. There's your Dogecoin chart. This just reiterates the point that it doesn't matter what the sentiment is out there. It doesn't matter who's saying what. At the end of the day, please trade the chart that's in front of you. If the chart looks like this, it's bearish, right? If it did start to break and get above here on Doge, if it gets above 11 cents, that would start to show signs of strength that maybe things are changing. But right now, even one of the most powerful rich people in the world has no effect on pumping a coin over there. So you would be looking for a deviation like that back above the range on Dogecoin. It's yet to occur, right? That has not yet happened. So be selective about the coins that you're picking, right? You have to be really, really careful with regards to what you're trading out there. We can have a look at a couple of the other coins. Please do drop your chart coin or your requests in the chat section. I'm going to bring those up in a moment. 𝗕𝗬𝗕𝗬𝗕, I see 𝗕𝗬𝗕 is one. We can have a look at 𝗕𝗬𝗕. It's been a while, so let's see. Okay, 𝗕𝗬𝗕𝗬𝗕, the fact that it broke back into the trading range over here is not a good sign. That means that, you know, you may come all the way back down to the bottom of the range. This is currently your 𝗕𝗬𝗕 chart. You cannot deny lower lows, lower highs. It's still bearish, right? So I would have to wait to see either a break and a reclaim above the range high or a sweep of the range low in order for me personally to get interested in 𝗕𝗬𝗕𝗬𝗕. We can have a look at MOG as well. Let's have a look at MOG. I do believe, though, that, you know, if you line this up with the rest of the timing cycles, with the rest of what's going to happen in the market, this provides a great opportunity to get into some of these meme coins. So this is coming into a key level over here. This is major support, but you did lose the major upsloping trend line. That is your low boundary of the parallel channel. That has been lost, but this is a significant zone. It's got a lot of digits over here. The last, man, there's too many digits, guys. Screenshot that and zoom in. Too many digits. I don't want to try and read that whole number out right now. Okay. So how can you summarize this market? What's going on in the market? There's a couple of bearish catalysts and bullish catalysts. That's why it's kind of evenly split at the moment between bulls and bears, chopping price around. Bearish catalyst for the upcoming months. We have September seasonality, but I can almost argue that you could throw that onto the bullish catalyst list because we're already into September and we've seen a lot of the drawdown take place. We got the Bitcoin supply, you know, all the different things, the government, Mt. Gox, this, that, outflows galore coming into the market. That's the Bitcoin supply. Kamala odds increasing within the market. That is a bearish catalyst. Geopolitical tension around the world. SPX has more downside, at least according to a lot of people. Priced in expectations of higher cuts have already started to take place within the market. And then we have the ETF outflows correlated to the S&P 500. Those are your bearish catalysts, right? Bullish catalysts, Trump debate, that's coming up tomorrow. So pay attention to that. Watch some of the Trump coins, right? Go and have a look at, we'll bring one or two of them up in a moment, but the Trump debate is tomorrow. Trump, MAGA, we'll look at some of those. 𝗖𝗔 is coming out of prison. I don't think he'll have any active role in Binance. Well, I'm actually sure he won't, but he probably will be bull posting. He'll be on Twitter and he's got a huge reach, right? FTX Q4 liquidity injections. Remember, a lot of the guys are going to get paid out from that liquidation event. They're getting paid out in stable coins, and those guys were true degens. They're going to be looking to re-enter into the market. Okay, seasonality regarding the election years. We've spoken about that a lot. SPX recovery, higher cut than expected if it's more than 25 basis points. Naturally, as they continue to cut and cut and cut interest rates, remember, this will bring newfound liquidity into the market. There's like over $6 trillion in money markets sidelined, which are not going to be earning as much yield anymore once the interest rates start to cut. And consequently, that's going to flow elsewhere. It's going to flow into things like the stock market, and then it has a spillover effect into crypto. ETF inflows, if those start to uptick, that becomes a bullish catalyst. And then the stable coin inflows are once again picking up, and the stable coin inflows move into crypto. So those are things to look forward to within the market. Remember, also, Cybertruck giveaway. You have 6 days, 5 hours left to participate in this. Any of you that are whales out there as well, you get a bit of a double benefit if you go to the link in the description here. If you trade $8 million in trading volume, which is actually not that hard, guys, you will receive a $5,000 bonus, and your fees will be limited to $3,200. So you will not pay more than $3,200 on trading fees if you use that link. That's just a current promotion that's going to be lasting for a little bit longer. All right, I do want to look at, let's see, MAGA. Let's quickly have a look at MAGA, see how that one's doing leading into the, at least, debates that are going to be coming up. So, okay, any interest over here? Any key levels? Not really. This one doesn't look too great. It's kind of in the middle of nowhere. Let's have a look at Trump. Let's go to Trump. Where are you? Okay, Trump up 15.7%. So let's pull up the chart. This one's a little bit slow. Okay, I think this one's not bad. You know, it's come off a very, very strong downtrend, hit the key level, the horizontal, and started to become, or at least it formed a range over there, started to form high highs and high lows. This is one to watch. probably worth having a little bit of a position in Tremp. This one looks better than Marga currently, at least in my opinion. Okay. We are 29 minutes in. Let's leave it over there. Thank you all so much for joining. The rest of you, I will see you in the Whale Room live session later. I hope you all have a great day, and cheers for now.